Okay, hi there, guys. Can you hear me loud and clear? Hope we're doing well. Uh, how are you, Lauren? I'm holding. Head in sand tomorrow. Well, it's a good idea to put your head in sand on a Friday anyway. All right, guys. Um, let's get started. Welcome to Trade Setup in the live stream. It's the 18th of October. So anyone that's new, feel free to link into us at Twitter. You'll see in the top left-hand corner. Also, Facebook is our top right-hand corner. That's the address there. Most importantly, link into us on YouTube or subscribe to us on YouTube, the bottom right-hand corner. That time, anytime we go live, you'll get a bit of a push notification from YouTube if you don't already have the trading app from TradeSetup. Alrighty. Also, just remember our general advice warning in the middle. This is all just our personal opinions and what I see is going to work and not work. Anyway, let's get up and running. Thanks for joining us, guys. How's everyone going today? Or the last few days? Hope we've been doing well. It's been a bit of a it's been a choppy few days, which is to be expected. We'll go into that in a minute. Now, for some reason, I'm not getting my. Just 1 second there, guys. I'll just put you on mute for a sec. Okay, you can hear me there. Yep. I don't know why I'm not getting the. It's on Spark. It's not giving me yesterday's data. It stops at the 16th, and the same with the Dow. Dow's on the 16th because actually looks pretty good. Although it was down slightly last night. What was the S&P showing? So we'll have to work through. Actually, let's not worry about them too much. We'll go over that. We'll go over the DAX. Sorry, the other markets, but we won't worry about them too much. They haven't changed too much actually. I think the Dow was down about 90 points or so. The S&P was down a couple of points, less than a point actually, along with the Nasdaq. So they were pretty flat all in all, and that's us right there. There you go, 18th, 17th. All right. It's getting Helen. Sounds like IG. It does, doesn't it? IG tend to have a few issues just at the wrong time. But anyway, we don't. For anyone that's listening out there. All right. So last night the market was pretty subdued. There's earnings are starting. They're kicking off. Still got the usual headwinds. It's been pretty quiet on the tariff front. The market had a good bounce the other night. I think earnings kicked off okay, but then they had FOMC come out and spoke last night. I can't remember what the president of the FOMC is. What's his name? Powell. Powell. That's it. He came out and spoke. Basically said they're pretty much the whole lot of them. Any voting members in agreement that the rates are going to continue to rise, and that's completely against what Trump wants. He reckons they're making a mistake. Blah blah blah. But the idea is to keep inflation in check. It's not to just let it get out of hand and then try to subdue it with a couple of rate rises. Either way, you're going to have to raise rates eventually anyway if it gets out of hand. So the Fed is pretty much sticking to their guns, and it lifted the US dollar and it lifted bonds slightly. So I think what's happened overnight, you've got the FOMC come out with their minutes. Everyone read into that, lifted the US and the bonds, and then because the bonds lifted slightly, I think it's the same sort of fear that might get another spike in bonds, in US bonds, which is going to lead that's originally what led us lower, the US lower when we got smashed, and that happened again in January. Sorry, again, this time it happened back in January, I think, when the first bonds first ticked over that 3% mark, I think it is. So they're around 3 point, US 10 years around 3 point something, 3.12, I think, 1, somewhere around there. And over that 3% mark is sort of that level they're looking at, which is sort of that more important level. Once it ticked over there, that's when they spiked a bit and caused havoc in the share market. So I think there's nothing really changed on the Fed on their outlook. They're not saying we're going to raise rates faster or we're going to slow down. It's been the same for the last 6 months. They haven't ever changed. It's just the same sort of oscillations in the US dollar. It got a bit out of hand when the US dollar spiked a bit along with bonds because they were jumping into that for a safe haven. And then they'll obviously come out of that once the market sort of found a bit of a base in the US anyway. And then yeah, it's starting to tick. I think longer term is still ticking higher in the US dollar, so that's probably going to put pressure. It's going to be a bit of a headwind for the US for growth, but it'll be interesting to see how their earnings come out this time around. They've just kicked off, I think, at the start of the week. Well, last couple of days anyway. IBM disappointed last night, which probably capped the market a bit as well. So yeah, we'll see. I think sooner or later that there's going to be more news regarding China. It's been pretty quiet in the news lately. It hasn't really affected the market too much. The market hasn't really been focused on it. Um, but yeah, we'll see how that goes. Now, this is the ASX. We'll go over the charts now. We're down 11 today, which you probably would have expected. Um, that's the daily chart we've been looking at. It's more, I'm trying to keep an eye on that weekly chart at the moment. It's more that once it broke through, which we'll just draw it up quickly again, just to refresh ourselves, taking a refresher course. Come on. There we go. Now that's sort of the level we're looking at, and it's broken through. We're hoping for it to hold up around 6,000. I didn't mind the 2 legs lower, but I thought there might have been some buying support. It's around that 6,000 mark. So the market's it has broken through that. So whether or not we're going to go into this major correction, where you're going to get lower highs on the weekly basis until we correct that weekly or that longer macro trend up, or whether we're just going to start finding support. But I think either way, it's going to take a bit of time to play out. It's not something you just go diving into the market now, trying to pick the bottom and trying to pick those cheap stocks, because they can always, like I said, they can always get cheaper. You just got to be careful of that. And if this market does sort of bounce and then you see your shares sort of drifting higher, they can really grind higher. It's sort of a false sense of security, if I can spit that word out, where they can grind higher and then boom, they just come out of the gate. They can gap down. You can get caught if this market piles in, short again off the lot. There's a lot of sellers that just pile into the market and press the market lower, especially if it happens in the US, another 800 point down day. We're going to gap down and we're going to get a lot of people get squeezed back out again. So it's really important just to let this market play out, I think. Or if you're looking to nibble on some shares, I suggest bearing in the back of your mind what's happening at the moment with we've only got 3 in the portfolio. I think we've only got Wesfarmers, which is short, and that's we had our stop at 48. It was 2 cents shy of that the other day. I think it has got to 47.98. So we're still hanging in there on that short. We booked some gains, short from 50.35, I think it was. Yeah, 50.35 up here with this breakdown here, and it's been going quite well. We're going to hold that well as long as we can. I think this could actually pop down through 47 quite easily on the weekly target. Look, we've got right back down to sort of that 45, 46 zone where this market, just purely where that broke out through, what was it, back in about the 20 in May, say mid-May, mid to end of May. You could easily get down to 46. This could just spike, and especially if the market caves in overnight and we follow suit, the next day, this market, the Wesfarmers could just continue lower. It's just squeezing a lot of those people out that bought it up from $40 up to 52. I mean, anyone that sort of bought it late has been squeezed out, or they're just sitting on a loss at the moment and just trying to, what is it, head in the sand down, Lauren? Putting their head in the sand and just hoping that it bounces back. But either way, that's broken down. It's broken the anchor through 49 when it pushed through that 49 zone, which is the anchor to this trend up. It squeezed a lot of late buyers out. Potentially, if this breaks back up again and you build a lower high, this could go a lot further. But we'll just keep an eye on that. Either way, we'll probably be stopped out in the meantime. That's Molly. Look, that weekly looks great. I really do like the weekly. It's just that it's struggling up towards that 26 zone. It got to 25 a couple of days ago. You can see it. edged up to 25. There's some good news. Bang, down she goes again. But a lot of time that can happen for whatever reason. We don't get told the news, but a lot of people do get told the news. It's just something coming out. It's a bit of a surprise that it gets pumped up into an announcement, a positive announcement, and then it gets sold off again. So um, yeah, but that's Molly. Still looking pretty good on the weekly basis. So we're hanging in there. Stops at 21. If we get stopped out, so be it. Is it 21, 21 and a half? I think it's 21. RBL. This is Redbubble. Again, this is a play around that weekly chart. The weekly chart looks really good. You had this market's pressed down, held, extended up to two, had a bit of a pullback. It tried to go higher, and it's just come and just recently built a higher low at 150. So it's starting to press higher. It's just up against the overall market at the moment, which is a bit of a shame. But that weekly looks really good. I think the three of them, longer term, the weekly's looking great. The short's working out. They're all in our favour anyway. But they're all positive, really high probability setups. It's just, I mean, I don't mind if the market comes under a bit of heat. They're holding up okay, and that's always a good sign. If it starts to bounce, you get a strong bounce in the ASX, we should see these start to go and really chase. People will be chasing them higher because they're really, quality setups at the moment. So that's all we were looking at. It's hard to find. I mean, I'm saying all that. It's a bit harder to find the quality setups just at this stage. I mean, you can flick through the charts and see, to be honest, bugger all that's setting up. I'm not seeing too many. There's been some good ones. Mesoblast is one that we're just watching. I like that. I like having the daily. You can see, I mean, it's pretty clear. It's sort of punched around. This is back in 2018, end of 2017. Spiked up, pulled back. It's holding higher levels. To sort of run up again. The pullback is starting to hold higher levels, and you can see this run up here. So we're anticipating now. We took a part of this one. Don't remember where, what, how, but it was quite good. Handy little gain up here. I think we got out around 215. We got stopped out on this. You can see that big gap down, but that was from about 180 or thereabouts. I can't remember now. Yeah, it was somewhere around. Well, actually, it might have been. Let me just check. If anyone had that with us, 175. In at 175. First bit was at 199. Second partial was at 215. But it looks like it's still holding. I want to see that hold above $2. They can hold above $2. You can see the MAs are still, it's still hanging in there. They're not really rolling over. It's touched on the MAs once a few days ago. And if we can start just holding those high lows, you can see the selling pressure from these highs, and that spiked up quite heavy. The selling pressure has been quite good. It's pressed down, and what we want to do is just see that the buyers start to step in again, see if we can pop up through 210, or at least just chop around above between 2 and 210, and see if we can start to lift. The weekly still looks pretty good too. You can see that that's so that line in the sand of $1. Then it popped up $1.25, holding again at about $1.30, $1.40 through here, then lifted. So once it broke through that $2 level, that's quite significant. So it's just come back and retesting that breakout zone. If we can start to lift again, we'll jump on board. So that's probably the only one we're looking at. And I did get sidetracked there, didn't I? I never normally get sidetracked. Where was I? XJO. So it's more the XJO, like we spoke about on Monday. It's been very wary. It's at the moment, I think it's all about picking the best setups, high probability setups, looking at what's happening, not just trying to pick a bottom. I mean, pick a bottom is a very low probability trading style. I think you're gonna get caught more often than not. But yeah, just letting everyone else do the heavy lifting for you, build the higher lows, and you can go from the higher lows. It's just evidence, but always, even though you do get in, if it goes in your favor, just be wary that this overall market's a bit bearish at the moment. It's a bit tentative, so things can turn pretty quickly. But just looking at that, we've got actually we haven't got a zone through here, have we? We've got a little zone, I'd say around 58. I think we spoke about this the other day, and we want to see now if it can break up off 68. We've got our chart that we spoke about before. Let me just find here we go. So this is just as a reminder of what we're going to be careful of. We've got that touchdown to 58 from the highs. We've got, touched on 58. It's touched there a couple of times, and that's more of a buy zone. Whether it's a buy zone and that's going to be the bottom, we don't know yet. Unless, like what I was saying, is going to play out. Basically, nothing will just bounce up in a V-shaped recovery, just bounce up and continue to go from. It's very, very rare. You might get a nice solid bounce up like this, but you're going to get a confirmation of a higher low. And generally a higher low, if you can measure that leg up there, look, we could probably do it right now. measuring that leg up is probably about, oh, about the same. So basically, if you're going to get something like that, let me just double up on that. Clone. That's what you'd be looking for. You'd just want confirmation, because this could have easily just rolled over off the highs, roll over and taken out the lows. It's a bit more unlikely when it actually does retest the highs, like this type of setup. But what we're looking for at the moment, if this starts to grind up like that, I'll be potentially looking for that lower high, because this could be a major, that's your correction there, major lower high, and that could take you right down to that longer term support zone, which we're looking through potentially around 55. So it's just, you just have to bear in mind, things don't change overnight. The structure, it can easily bounce, and if it gets a bit of a grind, I mean, we could just roll over from here, who knows? But you'd want to see it pop up, pull back, build your higher low, and then that could warrant some buying opportunities if they do set up, and then just see how far it's going to go, because generally off the weekly chart, just remember there's going to be a bit of fat in those moves if they do play out. You know, if you can get something like this, pop up, pull back, even though we could expect a lower high, major lower high, there might be some nice little setups where you can just really keep tight risk. Follow it up with tight risk, book in some gains, take advantage of that little pop. And then, you know, if you do get stopped out, see how it goes from there. Or we could easily just, you know, we could sort of, let me just draw it up again. What am I trying to do here? There we go. We may just sort of edge up off that support. And then what we could be looking to do is go back to and retest. And if we see this type of price action, I think that would be a lot different. And that could lead us to a nice little rally. Does that make sense? So this sort of grind up, I would be led to believe that we're going to get a lower high in play and another press down at least to that support zone at 58 again, or even through. But if we start getting a pop up, then a pullback to build that high low, and we can get that little contraction with inside high lows and some minor lower highs, just that squeeze, the price contracts, and then it's going to, you would expect that to be, that overall zone to be a major high low. You know, it could be anywhere, say 59, 58, 50, 59. If that plays out, then I'll be more biased to the upside and see if we can tack back up to those highs. But we'll see. Like I said, a long time coming. I think that's going to be before it plays out. Let's just want to quickly look at, well, I've got it here. Any questions, guys? Everything making sense? I mean, we spoke about this Monday, but yeah, chuck into some codes. We'll get into the codes today. Yeah, VAC. I've got my eye still on VAC. We'll have a look at that in a sec. I don't even know what I'm looking for now. Watch list. No. Let me get the Dow. So that's the Dow daily. I mean, all in all, longer term on the weekly, it's still, you know, it's still holding up quite nice. I mean, your key level's right down here on the weekly. This could potentially just be a, you know, we've got that zone through here. It could just be a correction. I mean, everyone in the US is waiting for that correction. And once it got up through the highs, it happens a lot, you know, more often than not, it can get through the highs. What it's going to do is drag in some buyers, and it turns around and squeeze them straight back out again. It can touch down, and that sort of move down is going to scare a lot of people. I mean, it scared me, scared a lot of people. But this could potentially hold up at that 64, say, sorry, 25,000, a 25,000 mark on the Dow. Chop around here for quite a while, a bit like this. You know, it punched down, popped up, straight back down to retest, and then started building from there. We could do the same thing here and start to build. Again, this could take another 6 months to a year to play out and just press up into new highs. And take out these highs at, say, about 27,000. We don't know what's going to happen. Just because we've got a couple of green candles doesn't mean this thing can't just roll over. It could easily just pop up, chop around a bit, and then drop again and retest all the way back down to, say, 24,000. But we'll see how it goes. Prudency is the name of the game, I think, at the moment. What else we got? So that's a Dow. Look at the major S&P. It's, you know, pretty much very similar. Oh, I don't want that, do I? Try, you know, similar type of structure here. That was your major. That's your weekly anchor leg to this leg up. You're coming down to sort of rough support zone through here. Whoopsie daisy. There we go. Support zone through here. And that could just be a bit of a flush out of all these longs that are built up through here, a bit of a flush out. If it can hold, again, we want to see, give it some time, see if it can sort of do this, maybe retest, contracting on itself. And what this is going to do is just going to give buyers more confidence if they can see these high lows build and lower highs, but that's a bit of a squeeze. We want that contraction in play. And then what this is going to be, it's maybe a continuation zone of people are edging into positions, continuation of higher low here, and then just finding some more buying to really break out. As soon as you get that breakout through the most recent lower high, then I think game on, but we'll see. Or it could just topple over. Alrighty. Now, any questions? Let's get into the shares then. Oh, I didn't transition. Sorry, guys. See the charts better now? All right, let's start with VOC. VOC is going well on the daily. Look, this is a tough one because I do like that daily, and I do like the fact that I just wanted to see more work done purely because of the weekly charts. The problem for me with VOC and what's sort of keeping me away at the moment, even though the structure looks great, the weekly is the great one, but the problem is it is extended up here. So maybe it's going to be a bit of a flush out of that. Let me start that again. There's a little minor leg up zone up there at 375, which is only probably 20, 30 cents away, 40 cents away. You've got this level which is just touching on now at around 330, 340, 335. It's just touching on there now. It's just that it's overcooked for me a bit. It's taken a fair bit of energy just to get, a fair bit of buying pressure to get from overbought, just from that 220 zone, 215 to 220, to get up to 330. And it's a good little run up, but compared to when it's in a bit of a bull market, they really kick on. So there's still some selling pressure in there. Whether it's just it's got to chew through those sellers first before it can take off. But I think it's far from really confirming any sort of uptrend at the moment, or even a breakout. I would prefer to see that weekly, so that's your resistance zone, pop up, and then maybe work its way back into that, just back below, but then consolidate around that level. If it can consolidate around that level, I think we're going to have a nice little trade on. Especially if a bit of heat comes out of that weekly, it might come, some selling pressure just come back in, but then what you'll see, I want to see evidence that the buyers are stepping up around that level and starting to hold a higher low from the weekly, and then really it's just a matter of going back down to your daily and off she goes. If you are trading from that daily, that I don't like the fact either that it's just spiked up into that 330, 335 zone. I mean, it could just trade straight through and off she goes. Who knows? I mean, if you're going to buy it through, traditionally the way I would look at it is buying it through that high at 337. I just don't like the way it's pulled back there, and expecting that to be, kicking on strong. Buying it through that high, my stop below that low at 229, but I just feel with that weekly chart, the way it's setting up, with that weekly, it could be a bit of a flush out, and then I turn around, it contracts back in like we said on the weekly, I get stopped out and have to try again. I'll be more inclined just to let it go, for instance, until that weekly is on the rise. What else we got? Telstra. We were looking at a short on that for a while. Yes. Still, 22nd of August. Was that on VOC? Let me just go back. 22nd of August. Okay, so we're right back here. Not a bad spot. That's a nice little entry, aggressive. Nice little entry off that. You were looking to ride it up to 330, Paul? Yeah. Look, there's nothing wrong with that. Buying it from those lows, you've got that weekly playing out. Actually, that weekly's playing out all right. Buying off that higher low on the weekly, that's that little, it's, like I said, aggressive. But if it works out, it works out. As long as if you continue to do the same type of things and it's showing you an edge in the market, and if you continue to trade like that and it continues to give you, 60% right, 40% wrong, and you get 2 to 1. That's trading. That's perfect. It's your edge. And a good edge. This could just continue on. Paul's going to be looking like a legend. Either way, I think you're looking like a bit of a legend now at the moment. Now, very wary of, still wary of Telstra. I think it's got overhang. They even said, I think the most recent statement, they said they're still up against it a bit with, what do they call it? Just the market's changed quite a bit, and they're trying to change with it. Obviously, there's a few headwinds for them, but they are finding a few problems. For me, I wouldn't be going long this because I just see that it's got that potential still to break down. We were looking for a short earlier than that off a lower high. It's still, if you're taking that as your lower high, I wouldn't probably take that. I'd probably take in this zone. And you can see there's just all sorts of resistance zones hanging around on Telstra. It is a favourite. I know that's the biggest problem. It is a favourite of, longer term, buy and hold, picking out the dividends. That's great. But when things go down, dividends are pointless. It is down on its lows. I know that. But you never just say, oh, this is a low, because really you're just trying to pick the low. This thing could just keep going down. The anchor for that weekly trend is still up, right up around 380. It's only really contracting off this leg down. Let's just go back to the chart, 380. So that's probably your anchor for the weekly trend, your anchor down. We've had this move down. We're only really contracting this move down. It's about a 50, 60% if you're a Fibonacciist, 50% retracement, and it's starting to show weakness again. So for me, this little breakdown through that sort of 310 zone is showing weakness more than anything else. It is extended down here, but it might pop up, go to 315 or so, and then drop down again. But that weekly, look at where the weekly is. The weekly's prime for potentially a rollover. Now, if it does roll over, first thing you'll be looking at is it going to be a lower high on the weekly? Sorry, a higher low. It's going to fall short around 280. Either way, we're booking 20 or 30 cents. Or it's going to go, blasting through 260 and make a new low. So that's something, we could easily get down and retest that low of 260. So yeah, we'll just keep an eye on that. I don't think that's, with Telstra especially, I think there could still be some pressure on the short side. We'll just follow that one. It is, the one thing working in its favour, it's down so low, it's down at that 260 zone. The pressure's still down. The pressure's on the monthly, the weekly, and potentially the daily now as well. The pressure coming down. So sellers are pretty much still in control. It's just if they can give it that last final nudge to break through 260 maybe, or whether they're going to press it lower. We'll just have to see. All right, what else do we have? VOC. So let's just get into CLV. This could be a long one. CLV, I like this. It's especially the way it rejected. You can see it's sort of open, traded down to 130, and that was pretty much retesting that zone where it's traded a couple of times now. It's compressing down with some lower highs, but it's really, let's just draw it up. It's really showing some consolidation more than anything. You've got that support zone around that 130 mark. You can sort of say that's been compressing down. The way it rejected there, I still want to see it get up. I mean, if it just, say from here, for instance, if we're just about here, so that's 130. If we pull back and build a higher low, just be careful because it can easily do a higher low, something like this, pop up, get to 155 or 160, and then roll over again and trade down to 130. So you can easily get squeezed because it hasn't really broken out of that trend. You'd prefer to see it, break up through here and then pull back. So if we draw that, that's our resistance. You want to see it pop up through here, maybe contract a bit, and then start to lift from there and see if we can buy off a higher low. Because that way you're buying into a rising market rather than buying into a market that's still in longer term contraction. And this market's contracting at the moment, so just keep an eye on that one. IMD, still looking a bit messy. Look, that weekly's heading up. It was just sort of a random pullback here. So on the weekly chart, these are the legs that I'm seeing. Legs 11. It's popped. Yeah, look, it's probably hasn't done that. Bit of a run out, pull back, minor pullback, took out the highs, minor pullback, and then we've had this really kind of a messy. It's really wicky too, so it's got a bit choppy once it got through, 80 cents or so, and that was the previous highs through here. 80 cents. It's starting to get a bit choppy. You can see the wicks here, so it might be a tough one to trade. Even the wicks on the downside, that sort of push right down to $1.10 from pretty much $1.25 on this candle, and then finished green. This is contracted down here. We're popping up at the moment. A bit of volatility in that one. But if you go down to the weekly, if this is our contraction, we're coming out the other end of it, then ideally off the daily, you'd just be looking for a higher low to play out. The market's starting to rise in your weekly. I want to see it sort of consolidate around here and then start to lift if it can on IMD. And then really, you just want to see those high lows so you can really reduce that risk. You're not going to throw too much risk in it, especially the way the markets are at the moment. We're not bouncing on the overall markets, but I mean, it could just turn around and go 300 down on the Dow tonight and drag us lower with it. Or China comes out and says, we're not going to play ball, whatever happens. SUL, I've got my eye on that one too. Actually, no, I haven't. I'll lie. This, I think you could find a lot better chart than SUL just at the moment. That's the weekly. Flicking it back to the monthly. Looking at the monthly, if this plays out, okay, the run up here, pull back here, you've got that key zone around, say, 650 to 7. This is a major lower high, this zone through here, say just above 11. Just pressuring, we could be finding this is just getting a bit choppy through here. It may start to roll over again. It's still holding some lower highs. So you got the high up here, lower high, lower high. It could still press down and start to trade down towards that 7 mark. So after monthly, you'd want to see it pop down, and then you want to see a higher level. You want to see a higher low off this double bottom, off this base at $7. It's looking, you can see the stochastics. It's taken a bit of effort just to push up to around that $10 mark. So just from there, just bearing that in mind, let's go down to the weekly. I don't like the way it's wicked up through here. It rejected that zone. You've got a couple of down days. We're starting to drive up at the moment. I mean, this could easily just stagnate here, build a lower high, and then roll over, and then we could be getting that pullback we're looking for on the monthly. Or, I mean, it could just rally up. I just don't like the longer term base on it, the longer term structure. And on the daily, the way today it sort of popped up through that high at 931 and got up to, we're just above there now, got to 41, and it's just pulled back now. It's overextended up here. I'm just not liking that on the daily either. So for me, SUL, I'd just be steering clear of at the moment. And if you are long from this little pop up, I'd really just be, for me, I'd be managing my tight risk. Excuse me. Galaxy, an old favorite in a downtrend. Excuse me. All right. So Galaxy, excuse me, little tickle in the throat there. Now, technically on the weekly, it's, I'm just taking a step back. Let's build a potential trade from right back in that monthly. Now you can see this push up through 4. It really just cleared this level up at $4. I know that was from back in 2009. It cleared it, but it's still going to be a potential zone where sellers are happy to offload, especially if you held it through $1.50 up to $4. It's a good little gain. So there will be people that will be looking at that zone, seeing how it reacts, and you get this little pop up and then that rejection. So that rejection led to a bit of a sell-off. Weekly, from the weekly chart, it's the deeper this correction goes. Sorry, got my little girl behind me. So you got this here. So technically we had a run up here, a pullback, another run up, retested down to low. I don't really like that. I don't find that once it comes, whips out through the highs, pulls back, but it pulls back all the way to that support zone at $1.60. That's not a strong mark, even though it did pop up. Now we popped up here and we've actually, we've come back quite a way. I'm not a big fan of it. And you can see how it's just cleaning out traders. It would have stopped a few traders in here with that little pop up through 360, turn around and squeeze them back out again. I don't like the depth of this retracement on Galaxy. I'm not a big fan of it. It's down on its knees at the moment. It's still heading south on the weekly. I mean, you can look at the pressures down, lower highs, lower highs, lower highs, all the way down. It's still holding lower highs on the daily. It's just, look, it has to hold up for me, has to hold up here. And you want to see a sharp little break up, just to drag in a few buys, and then potentially a bit of a squeeze back down again. And then your higher low to work from off your weekly chart. If I can see a high low on a weekly, then potentially I'll be drifting down to that daily chart to see if I can find an entry. Yeah. So it'd be interesting to see on Galaxy. I mean, I'm not going near it anyway. I don't like it. I think it's still heading south. It's got a lot of work to do. The deeper the correction for me, the more negativity that comes in the market, and the more if it starts to hold up, there's going to be more people that have been burnt, and everyone's got a memory. You always remember when you've been burnt on something. Stocks I can see I've been burnt on, even if they start to look really good again, I'm really tentative, just because I haven't had a good experience with them. And I wouldn't say I'm the only one thinking like that. So I think the deeper the correction, the more people are probably going to get burnt on Galaxy, which means the less fuel for a new run higher. That's the way I see it anyway. But yeah, I'll just be wary of them GXY. What do we got next? SYR downtrend. Are you short these ones? If you're short, legend. Look, Syria. I first started looking at. I think we traded this. I can't even remember. Let me just check to see if we traded this a while ago. Where does S come in the alphabet? No, we've never traded this. It did come on the radar a while ago. And this is what I hate. Everything I've read about a fund manager's buying, they find value in this. It's really good. Boom, they head south. I've got a feeling they put out that news just to sell to you, to find some buyers to sell to. Um, Quality, I want that. Sorry, just adjusting the quality on my stream. So this is your weekly. I mean, the weekly's just broken a key level, basically through that 250 zone. You can see it's quite clear through here. Got a low, another low, broke through the low here. It's basically couldn't get through on that push. You can see this little push through. Let's draw it. Remember what we're saying um, with anything, a lot on the upside as well as the downside. When the market's bullish, if it gets through a zone, say it gets through like that, it pops its head through, but it comes from a quite a low, um, comes from quite a low distance, like this leg up through here. You'd never buy on a break. You just should never buy on a break through that previous high if it's coming from a low base, because technically your stop should have to be way down there. Now that's way too much risk to take on anything. Now that's for me, that's just going to be a washout every day of the week. It's more than likely going to be a washout. But what you'd be expecting if it was a strong market, potentially this sort of grind lower, and then you start to see some buyers step into the market, just consolidate just below those highs, and then start to lift again. Instead, this got smashed. Um, I don't like the fact that it's got smashed all the way back down to that low, and you can see that it's actually traded through the low, and what it's done is probably dragged in a few buyers with this move up here, and then turn around and squeeze them back out again. So that's a major lower high, really not looking good. You can see these stochastics, the buyer's pressure to get it up was only as far as $5 rather than drifted all the way up to $6 again. So that's not a strong market at all on SYR. And you can see this market, it's really pressed down. It's broken through that 225, I think 250 support zone through here. And anyone that's bought it up here that's just holding it have been squeezed out of the market. So if you're a buyer, um, yeah, you're going to want to know where your risk is at the moment. If you're wanting to buy, I'd be just steering clear of this again for a while. Just because it's come down, it doesn't mean there's going to be value. I mean, just remember, you can buy it. You may be in the right zone, but it doesn't mean that it's going to rally. It could mean that it goes sideways for the next 2 years. Now, again, if any funds have bought this up, they've made some profit, they've got back out again, they're not going to be jumping in anytime soon. So if you do sort of buy it because it's valuable, valuable, if you think it's value down at these lows, it could stay down here for a long time. I mean, the amount of crappy little stocks I've got into that you think is going to run up and then it comes back down, but you still see fundamentally some value in them. But I've been sitting on them for a year purely because I'm stubborn, probably, and I haven't thrown too much risk at it. But the stubbornness has just left me in the stocks. Just because the story is good doesn't mean they're going to rally. It doesn't mean anything. It could mean that it just stops from going down. So buying something like this just because it's pressed down, say in 150, where you think it's let me just minimize that. Just take a look at that monthly. Just because it's coming down to this zone, for instance, okay, 150, yeah, let's get in there. That overall pattern is not good at all. This lower high, if you take it from $6 down to around say $4 drop from 5 down to 1, that could easily take us to 1. Just that press down. So if you're buying it around $1.50, yeah, you might get washed out. It might take a bit of heat. It might bounce back and then sit there and consolidate. But how long is it going to consolidate? So that's the problem with trading like that. If you're going to buy it, just sit on the bid. You're always really looking to buy off a high low. So this one, for instance, even though it pressed through that zone, you've got a high low here. You've got a potential reason to buy it. You're following it up. Your premise or your plan is that it's going to push up to $6. It didn't play out that way. You potentially got stopped out at a small gain or a break even, but you're not taking too much risk and you're not going to sit in the market when it's heading south. So I hope that makes sense. Thinking of selling. Oh, okay. Yeah, look, I don't like SYR. I would have preferred to take it on the chin. This move down here, this is, and in context of what's happened on the weekly major lower high, as soon as it sort of started breaking down to that $3 mark, I think there was going to be a bit of pressure. And now the fact it's broken through that sort of 225 to 250 zone, yeah, it could be underwater for quite a while. But anyway, we'll see. We'll see. Boom. What else we got? Have I just gone through everything? Or VOC, JEDE, what am I now? SYR, JAT. Let's get onto that before I keep talking too long. Look at that. Now this one, 3 million. Wouldn't have expected 3 million bucks worth. What's happened here? Any news? What's the recent news out on this one? Quarterly. Look, without reading the news, there's something good's happened. I'll have to go through all that, but obviously it's based on the back of news. It's popped up. That small little pullback, obviously just profit taken, and it's gone again today, which is quite healthy on more volume. Look at the volume that's come in. Like I said, 3 million bucks, and before that, that's 50 million shares, well, 51 million shares. So it's only done 1.7 a few days ago. So that volume's really spiked up. Yeah, pressed higher. Now for me, I'm always, I mean, you know, me, very risk adverse. I'm always inclined to just hold off. I think you got a key level. It could be a play for that 10 cent mark, which, in all honesty, then yeah, jump in. You jump in through those highs at 7.6, but your problem is your risk has to be below 6 for me. Good volume. It's got a bit extended here. This could just be, you know, pop up. The key level's 10, press down from 10. So you had a big run up, pull back, big run up, clean out all those buys, you know, from previously. That was back in 2018, I think, 2017. This move up here, clean them all out, pop up, dragged in a few more, clean them back out again with a, you know, move down to 4. It's a pop up. So who's to say that this little pop up here is going to be met with a lot more selling, just coming down, dragging it back down to 4 cents, 3, 2, 1, who knows? So you've got to be able to allocate your risk somewhere. You have to be able to. Otherwise, again, you could be sitting on something that you just put in the bottom drawer and forget about, which is again not the best way to utilize your money. But either way, it'd be interesting. I'm going to keep an eye on this one. I don't think there's enough data for me to jump into this. I'll be happy just to let it go. So I just don't know where. Like I said, if I'm going to buy this, and if we can just go into the last 6 months, if I was going to buy this, it'd probably be somewhere around now, around here, 7.5 cents, and I'd have to be having even my risk below the low of the day, 6.1. I think that's too much risk. That's about a 20% risk, isn't it? It's more than that at the moment, low of the day. So it's 20, 22% risk on that. I'm never going to throw that much risk at anything. So I'll be happy to keep an eye on this one. AEDT. If you're in Magna, that's brilliant. What's this? Eden Innovations. Now, I like the little run up here. That's supported with some good volume, and it was quite deep. So ideally, what I'd be wanting to see from this one is, oh, that's not what I want. Is more from the weekly chart. I think for me, it's probably, I'm not going to chase it higher. And like, we're always looking to buy something when it's rising on the weekly. So potentially, entry zones for me here, because it's rising on the weekly. This is probably a bit tougher. Then you get that squeeze in. You can see it, and potentially buying somewhere around here when it squeezes back up. Again, that was probably a bit late into this overall move up. But that's the type of zone I want to enter in. So when the weekly's on its way up, rather than buying into a contractive market or an overextended market. So this to me is somewhere like buying up here. Yeah, might work, but more often than not, they don't. You can get squeezed back out of the market. So for me, obviously, I'd like to see it, a few bit of selling, bit of profit taking, but then I want to see buys start to step in, to get that higher low again. So we had that run up. I want to see it sort of come down, and again, if it can come down in two legs, but into a zone where it's going to be a higher low, then I'll start to be interested. And interested if it can just contract a bit. Oh, that wasn't very good. Contract a bit, hold a higher level, potentially bounce, and then up she goes. If that's the case, but I want to see these buyers get squeezed out first, and then some further buying start to step in it to build that high low, to manufacture or engineer that high low, and I think that will drag me in to the market. So I know exactly I'm not going to risk too much on that trade, and see if that can be a high low, and then basically what you'd be doing from there for targets, that's your leg up, and then if that's your high low, you're starting to extrapolate that first leg up to a potential zone where you just keep an eye on, and that especially if it holds, if it's not a 50% retracement, if it's like a 30% retracement, a lot better. It's going to show a lot more strength. Yeah, so that's what I'd be looking for. For me, this whole run up here, sooner or later you're going to run into some profit taking. For people, once that starts slowing down, you've got that lack of buying support in there, then I think you're going to find that might just pop down. Look, could be completely wrong. Always happy to be wrong and not in it than right and in the trade. There is that off occasion that I'm going to be right and in the trade. That'd be good. What else we got? EDE, VAC, 3 pushes high. Oof. PNV. Look at that. That's from a daily. That's not looking too bad. And if we just go back, I've had this one on the radar for a while. You can see it's holding, although again, it's just my risk. It's just my Davin, my risk-averse nature. So we had a run up here. Market's tried to press through that high a few times, and it could be a similar kind of structure of what's playing out now. 3 touches here, pops up through the high, takes it out, and then bang, straight down to build a high low. And that's your weekly high low. So pressed up, pulled back, next press up. We don't know if this is finished just yet. I wouldn't say it is. My anchor for that is around 45 cents. This low through here. That's my anchor for the leg up. Now, if that gets, I don't want to buy it up here because for me, it's looking like it could just wash out that 62.5, drag a few buyers in because it's shown a bit of, especially when you drop it back to the daily, it's shown a bit of positivity. Whoops, there we go. That's grinding high. The fact that it's grinding high like that, it doesn't lead me to believe. You want to see something like that, boom, find your zone and then it go on. It just kick on. You don't want to see that you jump into a trade you're in positive territory for a little bit, and then it comes back, retraces on you, and then you're behind the eight ball a bit. Even if your stop's not triggered, you're still underwater a bit, and then it grinds up again. You go, okay, we're back in the green. Then it turns around again, gets you back to break even. That's not something you want to see. When you're right, you should know it. Things like that. If you bought it here, for instance, just go back on that. Probably would find a zone. It's just so. For instance, if this was your daily, this sort of zone, you buy it. Say you buy it on the breakout there, you can see it really kick on hard, and then it has this pullback, but it holds a higher level when it pulls back. It's not pulling right back like a deep pullback. You want to see a shallow pullback and then holding higher levels, and then it goes off again. So that's when you know you're going to be right. When it kicks on quite hard, you go, okay, I am on the right side of the market. There's a lot of fuel to really take this higher. In essence, I don't think that's what we're seeing just at that moment. So up here around 60, I mean, it could be wrong. That's fine. Happy to be wrong. It doesn't suit my personality, this type of trade anyway, but I want to keep an eye on it too. So I think longer term, it could be a good one. PNV, as far as short at 6 minutes. Legend, John. I just got caught up with your shorts. Oh, where are we? Yeah, Syria, that's good work, mate. Good work. Galaxy, shorted that too. Very nice. That's we got. What's the news? Okay, let's look at Jet again. Yes, keep an eye on that. You just remind me, Meg, just remind me about that one. I want to keep an eye on that. I'll probably end up forgetting. All honesty, that this could be working out to be a longer term high low, say at 3.5, 4 cents. And see if they can follow this up with a few more bouts of good news, that would be great. All right, so I think we've got through them all. If I've missed anything, just let me know. But I think that's it. Let's see where ours are at. Got one going in our favour, one's doing nothing, one just backed off a bit. Back to 173. Ruble, red bubble. This one's starting to show a bit of concern up here. It's getting a bit stretched. It's just struggling. So this is another one I did see. I did like the structure on the weekly, but I did see a fund manager. And stupid of me, I actually bought into it. But more often than not, fund managers are not good traders. They use the news as well to get people in. So we'll see. They could have bought it down here at 90 cents, and they're trying to offload it around $1.60, $1.70. Offload it to me, but we'll see. Not a big stop on that one anyway. All right, guys, we'll probably call it a day there. We're only down 11 at the moment. Let's just look at the XJO. Let's look at the XJO intraday. See if it's getting a bit heavy. Just look at the 30-minute chart. No, it's looking a tad heavy up here. But this, I mean, it could just keep grinding higher. We'll see how that goes. I'm not getting much more data on the hourly. So this is an hourly chart. You can see it's just completely rolled over from 62, boom, straight down. We've broken the anchor, and the anchor to this downtrend was at around 559. We just broke. So it's just whether we get that contractive action just up and minor. You break through the highs, but you don't get too far before you get a bit of a pullback, and that's never really a positive sort of sign for any of the bulls out there. Whereas this is a really positive sign for the bears. You get the market pressed down, chopped around for a few hours, and then boom, straight down, chopped around, boom, again. So when you get that really acceleration to the downside, or if you're a bull, acceleration to the upside, you're on the right track. You know that the weight of the market's behind you, rather than like I'm trying to say, rather than seeing the market's pressed down quite hard, and then you get these little choppy sort of moves up. Well, let me draw that better. So the market's pressed down. That's your anchor. We've pressed down, and we've just taken out that anchor. You don't want to see this type of price action when you take out the anchor. It's a bit like, go back to the daily, this type of move, that grind higher before it should roll over. It just shows you that it's just struggling to find buyers up here. It did press higher, but it's really struggling. That was that sort of price action. So if we see that similar type of price action, just grind up, I'd be wary. wary we're going to get that leg down, and then from there, it's just checking out whether we're going to hold up above 58 or just blow through it. Anyway, we'll finish up there, guys. Thanks very much for joining me. We'll be back in on Monday at 12:30 again. Feel free to send through an email if you've got any questions or if there's anything you want to take a quick look at. Even a bit of a heads up to take a look at it. If you can't join the stream, just send through an email and we'll look at the actual charts for you during the session, and then you can refer to them after. Anyway, guys, thanks for joining me. Have a great weekend, and we'll see you Monday. Cheers, guys. Bye.